Welcome to the Digital Planning Podcast. This series is designed to educate individuals about all things digital in connection with estate planning, business planning, and estate and trust administration. To keep up with all things digital, please subscribe to iTunes, Stitcher, Google Play, Spotify, or wherever you download your podcasts. And now, Jennifer Ziegel, a partner at Kleinbard LLC, Ross Brook, a principal at Estate Genie, and Justin Brown, a partner at Ballard Spahr LLP, with today's topic.
Welcome back to the Digital Planning Podcast. I'm Jen, and I'm here with my co-hosts, Justin and Ross, and we have a very special guest with us today, Richard Zak, co-founder and CEO of Eternal Me, which is a platform created to manage digital assets and your digital legacy. So Richard, welcome.
Thank you so much for having me.
It's great that you could be here today. Thank you so much for taking the time. And, please tell us a little bit about yourself and what made you to decide to form Eternal Me.
Yeah, happy to. So after my third child was born about a year and a half ago, my wife and I decided to bust out the estate plan and make sure that we had that updated. We had first done our estate plan when our first children were born about 10 years ago. But, we probably, just like a lot of people, we kind of put it in a drawer and didn't really think about it. But after we welcomed home our son, we decided to revisit that and went back to our estate planning attorney and did a very good job of getting everything updated, except for when it came to my digital assets. A little bit about my background. I'm a technologist. I've been involved in software and the internet for almost 30 years now, and I have a ton of stuff online. And so when I asked my planner about digital assets, I started getting a little worried when he pulled out a piece of paper or notepad and asked me to tell him about my digital assets. So I thought, it's 2023 and at that time, and I thought, wow, there has to be technology out there to make it possible or make it easy for me to really manage this stuff for my own family. And when I went looking, I found there was nothing that I felt as a technologist was adequate to handle my digital assets. And so initially I set out to build a solution for myself. And then after speaking with a lot of folks about this and working with a lot of estate planners, I realized that this is something that probably everybody needs. And that was the foundation and the initial start of Eternal Me.
Richard, can you talk to us a little bit about what Eternal Me does and how it solves the digital asset problem that you were encountering?
So the first problem that I found was that it was really difficult to just get an inventory of what my digital assets were. So that's the first thing that the software does, is it really makes it easy for anyone to just inventory their digital assets. Then the second thing I noticed was that it was really difficult to create a plan to transfer those digital assets to my estate or to my beneficiaries. I went looking for online tools, which would make it easier to just sort of specify like directly on the provider what I want to have happen. But there were very few providers that supported online tools. So that led to the next part of the system, which is, in addition to being able to inventory your digital assets, you can specify your wishes for those assets. And you can record in a secure environment your credentials so that your executor or your trustee can actually take care of your wishes, take care of your digital assets when you pass away. And the third most important thing that the platform does is really tied to privacy and identity protection, because I noticed that all of the data privacy laws, and my background is in internet software and technology and cybersecurity, like I mentioned. But I noticed that all the internet privacy laws, your privacy rights end when you pass away. And so it's really important from a data privacy perspective to make sure all your online accounts are closed, even those that may or may not have monetary value. It's really important to close those accounts down if you want to protect your privacy. And so the system provides you a way to do that as part of the process.
Can you dive in a little bit further on your background and just help our listeners understand how that was formative in reaching where you are right now?
Yeah. So when I was 14 years old, I heard about this thing called the internet. And this was back in 1994, so I'm going to date myself a little bit. But I heard about this thing called the internet. I thought that it was going to change the world, and I really wanted to be a part of it. So I started getting online, but where I lived, it was a long distance phone call to get on the internet. So I was spending $2 a minute, all my lunch money, just getting online. And I realized that if I had this problem, then perhaps there were other folks who had the problem as well. So at the ripe old age of 14, I raised a little friends and family round. I put a business plan together and launched the first internet service provider in Northeast Ohio in 1994. And what we did is got people connected to the internet. Again, starting with me wanting to get online, but I got a high-speed connection to the upstream internet provider and found a way to share that connection with my friends and then hundreds of my closest friends all around. So that business did really well in terms of solving a problem, getting people connected to the internet. And I had my first sort of successful exit. I sold the business when I went to college. When I was in college, I quickly realized that what I loved doing was building software and working on software. And what we used to create the internet provider was this operating system, which at the time wasn't very popular, but it was growing in popularity. It was called Linux. Now, Linux is something that's now used all across the enterprise software market, but at the time, it was a very new thing. So in my dorm room with my roommate, I founded my second company, which was a enterprise managed service provider for companies using Linux and open source software. That's quite a mouthful for a college student. In fact, it was so much of a mouthful that they did, in fact, ask us to leave the dorm. But we ended up doing $500,000 in business in the dorm room in our first 6 months. So we found that this software was being widely adopted and there weren't a lot of choices out there. And this was back in the year 2000. So we were doing this remote in our dorm room. None of our customers really ever saw our face. They didn't know our ages or what our scruffy hair looked like. They just knew that we knew how to take care of their systems. And so that really got us launched into working very deeply with software and technology for the next 7 years. And then I sold that business as well to another bigger company that has expanded it and sold it and merged it. And believe it or not, that company is still in existence and doing really, really well. From there, I worked at a variety of startups until most recently I was a vice president for a company called Canonical, which makes a software called Ubuntu Linux. And it's one of the largest Linux distributions out there. It's installed on over 400 million devices across the world. So I spent a couple of years working with some very talented people there, probably the most talented engineers around, on supporting and servicing that software. And I did that right up until the birth of my third child, when I decided to strike out on my own and decided to revisit that estate plan. And that's really what ties this all together. So my background of solving problems with technology really led me to trying to solve this problem, my digital asset problem with technology.
Yeah, what I love about that story is that from the first business till now, the running theme is that if you have this problem, other people have this problem too, and helping them solve that. So that's great. Really cool.
Thank you. That's definitely been the motivator.
No, absolutely. And congratulations on your serial entrepreneurial success. And certainly everybody has digital assets and everybody needs them. For our users who are less familiar with exactly what digital assets are, I want to take a moment and take a step back and really discuss that, because digital assets are an ever expanding, constantly growing and evolving, asset class that touches all of us. It's as mundane as email accounts to, something very complex like a cryptocurrency or an NFT and everything in between. And there is no one accepted definition for digital assets. There's a variety of definitions depending on the authority being consulted. But for kind of our working purposes, and if you look at the governing law in the United States regarding fiduciary access to digital assets, and a fiduciary is an agent under power of attorney, executor or administrator of a will, trustee of a trust, or guardian of an incapacitated individual. fiduciary access to digital assets at someone's incapacity or death is governed in the majority of states under the revised Uniform Fiduciary Access to Digital Assets Act, commonly referred to as RUFADA, although I believe, Richard, you refer to it as RUFADA, and that's been an ongoing debate within the estates and trust world. Which acronym is the correct pronunciation?
That's a question that unfortunately I can't answer at this time.
Well, on the Digital Planning Podcast, we like to say RUFADA. So under RUFADA, there is a hierarchy for accessing digital assets. And the first prong for fiduciary access is what Richard had mentioned earlier on, is an online tool, which is an agreement between the user and a service provider, separate from a terms or service agreement, that allow for the deletion or transfer of assets in an account maintained by a service provider at death. And there's a lot of different components to that. And as Richard mentioned, there's only a few service providers that really actively have online tools on their platform. Google does, Facebook does, as well as Apple. And there's a lot of different mechanics for how those online tools work, because all of these service providers call it something different, and they interact in the platform in different manners, which adds an even more layer of complexity, to digital asset planning. And if there is no online tool under RUFADA, the second prong is for specific authority granted to a fiduciary in estate planning documents, wills, powers of attorney, trust agreements. And if those are silent on fiduciary access, or if the user didn't have estate planning documents in place, then the third prong is consulting the terms of service agreement for each service provider where a user had an account. And unfortunately, the majority of service providers have poor terms regarding death and incapacity provisions, or are silent, as to what happens in those situations. So that was a lot. Justin, Ross, Richard, please let me know your thoughts on digital asset definitions, because there are so many things there, from frequent flyer miles to trademarks as well. Let us hear your thoughts.
Yeah, I actually think that's a good point to jump in again with Richard, in terms of there's such a broad spectrum of what a digital asset is. When you're, as you're building Eternal Me, where do you think the biggest pain points are? Everyone's focus is on crypto because there's so much value in it. As we know, that is just one of many, many categories. So where do you think you're going to have the biggest hurdles to overcome with Eternal Me?
Yeah, this is a really big question, actually. And if I want to get sort of technical about it, I would go so far as to say literally every bit of data that you have is an asset, legally classified as one. So that's a lot. I mean, that could be gigabytes or terabytes of data all over the place that we all own as ours. That's all a digital asset, every bit. But that's a quite expansive view. And obviously, we don't necessarily need to be concerned about every little bit of data we've left everywhere. That being said, the most common digital assets we're seeing come in two categories. The first is obviously the monetary assets like cryptocurrencies, NFTs, but also things like domain names, online-only bank accounts, PayPal accounts, eBay businesses, online businesses, where they may not have necessarily a business structure behind them. They may be owned by a sole proprietor or owned in somebody's personal name, and yet there's still money or assets in those accounts that need to get taken care of. So I'd call those the monetary instruments. But the second is the non-monetary instruments. It's amazing how many people are really interested in what happens to their photos and their videos and things that have no monetary value that typically may or may not even be part of an estate plan, right? Like when my grandfather passed away, left me a box of photos from the family, right? Like, so all those photos from prior generations with stories written on the back, so I'd have an idea of what my ancestry was, and my children would as well. I don't have that. I mean, I have the box of photos from my grandpa, but I don't have a box of photos for myself and my family because everything is online. And so what I realized is that if I didn't take, if I don't take advanced planning here, if people don't take advanced planning on this, that stuff is at risk of being lost forever. If you don't have my password, you're not going to spend thousands of dollars to try to crack into my accounts, even if you could, to get that. So it's a really interesting question that's shifting, I think, the onus, traditional estate planning a little bit, where we're primarily interested in the high dollar value items. In this case, we may be interested in things that have no dollar value. But the most interesting question to me as a technologist, when it comes to digital assets and the biggest, what's the biggest hurdle? It comes down to something that folks also will see as a very simple question. Just where do you store your passwords? Where do you store your master passwords? Where do you store your keys? This is a really tricky problem because there's always a password to the password, right? Like if you use a password manager, you need a password to get in. If you have crypto, you need a private key or a seed phrase to be able to access it. But with crypto in particular, having that seed phrase or that private key, that's the same as having a briefcase full of someone's cash. With that key, I can have full, immediate access to that money. So when you have a large crypto estate, it becomes a big question of where do you put the keys? Typically, estate planners don't want to hold on to them because they don't have the technology and they don't want the liability. Same with tech companies. They don't want the liability of holding that in case there's some kind of a compromise. So what ends up happening? Well, typically at the end of the chain, you find somebody has scribbled down their password on a piece of paper and hid it in their file somewhere, hoping that their executor will find it only at the right time. So there's a variety of options out there, but I think that question is actually at the crux of the whole digital asset issue, which is how do you safely and securely identify your digital assets, create a plan to pass them on, and then pass them on after you've passed away in a secure way, knowing the whole time that those assets are protected. And it becomes a really interesting technical problem that we sort of set out to solve. But going back to what Jen was saying, this all has to operate under RUFADA, which is, as she mentioned, and as I hope I pronounced properly, which is the legislation in the United States that governs these kind of things. So our platform, as we've built it, it handles all three tiers. So the first tier being online tools provided by the providers. So we've mapped out all the ones that are available. And when you do your digital asset inventory, we tell you which ones need to get set up, and we help you do that. So as part of the process, you're hitting the first tier of using the online tools. Now, unfortunately, we've only identified about 12 providers out there that offer this. So it's really early in that space. So the second tier of RUFADA is that your explicit instructions in your will or in your trust represent the second tier. So when you go through the system and you create your inventory and you specify your wishes, for those providers that don't have an online tool, all your wishes are put into a schedule that can be included into any will or any trust. So it will identify your username, not your password, but your username, your accounts, and your wishes. And you can then attach those into your will or trust, and that satisfies the second tier. For the third tier of RUFADA, where the terms of service agreements apply, in that case, we've mapped out all the different ifs, ands, or buts about the terms of service for thousands of digital asset providers online. So if necessary, the executor will get a complete set of what they need to do with those providers when they're trying to administer the estate. So, yeah, I mean, this digital asset problem is big. It's expansive. It can be talking about anything from like every bit of data we've ever created, every account we've ever opened, to the very specific, high dollar volume, high dollar amount assets of crypto or NFTs, and the sentimental assets of photos or videos. And in all those cases, I think it's important to have a way to include them in a estate plan and include them or you include them in your trust so that they get handled the way you want.
So as an estate planner, I'm somebody who speaks with clients on a regular basis about what their wishes are with regard to their assets, both digital and non-digital. And I think there are a lot of estate planners out there who don't have the conversations about digital assets. So given all that you have learned in your journey through Eternal Me, what advice would you give to estate planning attorneys when they are speaking to their clients about digital assets?
That is the most important question. And the simplest answer is to say, take it very seriously. My advice to estate planners and to their clients is to take the digital asset thing very seriously. We have seen significant losses when digital estates are not properly planned. And that ranges from a customer who lost $1 million domain name to, we've all seen those reports in the news of crypto entrepreneurs losing hundreds of millions of dollars when they passed away and didn't store their keys. So a lot of times I think this is seen a little bit as a burden, and I get it, right? Like it's just one more thing to do. You know, it's already hard enough to like wrangle, you know, your customers to inventory their regular assets, you know, and get an estate plan done. It's hard enough to do that. And then you say, well, now we have 200 accounts we have to add. And it's like, oh man, that's just a ton of work. And I get that. But my question is, what happens if you don't do that? And what happens if $100 million is lost because a crypto key wasn't properly stored? Is that a risk you're willing to take? And if it's not, then there are service providers out there like Eternal Me and others who are experts at digital assets who can really help make sure this is covered for your customer.
Excellent. And, you know, I think to your point, not planning for digital assets definitely can translate into monetary loss. It can translate into sentimental loss. But, you know, to your point about privacy, it can really open up an estate to identity theft or other cyber security crimes if you have a decedent with all of these accounts that are out there that may have credit cards tied to them that nobody knows are in existence that need to be closed down. You know, kind of on the other aspect of it, if you don't plan for your digital assets and everything is online bill pay, the mail isn't coming, you know, it's going to be very, very hard to recreate somebody's personal financial picture where they're doing business, you know, where they have reoccurring invoices and, you know, where they even may have utility accounts. And so you're putting a great burden, you know, on your loved ones and the people in charge of handling your estate by not, you know, engaging in this pre-planning process.
Very good point. It's a lot. I mean, it can be a lot of work to do it, and there's got to be a real good reason to do it. But that privacy thing is scary. I mean, there have been lots of folks who have passed away who have then had their identity stolen and used for nefarious purposes before effectively the right organizations found out that they had passed away. So if you don't want to take any chances, the safest bet is to have all your accounts closed immediately with respect to not only your financial, could be from the non-nefarious, they could just continue to bill you for your service, to the nefarious, somebody could steal your credit card information potentially, but also even things like your purchase history that would otherwise, or your interaction history with a company, or your Facebook posts, or the things you've put on social media, or the emails you've sent. Once you pass away, those are all effectively can be publicly accessed or used or sold. So that's a whole other problem. And I guess one last point, Jen, that you reminded me of, not everybody knows how to deal with crypto. I mean, it's not like a bank where you just say, okay, I'd like to, withdraw this money or transfer this money somewhere else. There are legitimate concerns about how do you exit a crypto position in the most profitable way, minimizing a tax burden and securely transferring it from a cold wallet to a physical bank account and withdrawing the money. I mean, that process, if not done correctly, can lead to major financial losses. So I think one day crypto might be easier for everybody, but I think right now, if you're not really familiar with it, imagine if you're not familiar with how to deal with this and all of a sudden a loved one has died and named you executor, and now you're in charge of liquidating their $10 million crypto portfolio. It's a big burden, and you don't know what you're doing. I wouldn't do it. If I didn't know what I was doing, I think really I'd do, but
No, and I think the use and adoption on a larger level of people owning some type of crypto, whether it's through personal custody or through an exchange in the last few years has skyrocketed. I mean, Bitcoin's on a bull run right now, and a lot of experts are slating that it's going to break 100,000, before the end of the year. So that's also pushing a lot more people, into the crypto space that might not have otherwise, dabbled in it before.
Yeah, I mean, I think the latest count is almost 50 million people in the U.S. own some kind of crypto. And to your point, I think it's only going to go up from here. I can't say that about the value necessarily, but I think the option of crypto is here to stay.
So with those numbers, with so many people owning crypto, or just, I would say, almost everybody owning some kind of digital asset, what are the biggest hurdles that you're seeing in this space?
The biggest hurdle I'm seeing so far is, at least when it comes to crypto, is the lack of options for this. There are, and it's also the number one reported concern by crypto owners, actually, is that they don't know what will happen with it when they pass away. And they don't know how to plan for that, because they don't want to print out their private key and stick it in a will. So it could be a public document, right?
Yeah, I would never, ever advise that, ever.
I mean, even putting your account names in there is sometimes questionable, right? But, I think that's the biggest concern of crypto owners. And so they go online and they look for options, and there aren't any. And because the crypto exchanges they're not regulated in the same way that banks are, for example, with respect to even things like FDIC insurance and so on and so forth, there are no online tools at any of the crypto providers. So there isn't a single crypto provider out there that just says, oh, my beneficiary is Joe. Let me just pass the account to them. They do not operate that way. So that's the biggest concern, is what to do with my crypto when I pass away. And then the lack of any tools or planning really available to handle it or to handle it in a robust way. Now, as far as we have a solution to handle that. As far as people using our solution have found, I think we run into the same headwinds that most estate planners face, which is a lot of people put this off. A lot of people know it's important. They know they need to do it. They want to do it, but it can be very difficult to think about death and to think about these issues. So I think the process tends to drag on a little bit with folks as far as actually getting that taken care of. And I would say that's more on the smaller side, smaller estates, like less than 10 million. Because once you get to the larger crypto estates, say 10, 25 million and higher, there are some crypto trust companies out there that will handle this for you. But because of the liability and the security concerns, there's usually a minimum buy-in, and it's very expensive to have that taken care of in that way. So I think that's the other problem, is people are there are folks in the, say, $1 to $10 million estate range who have enough crypto that they really need it taken care of, but not quite enough crypto to pay the fees that the larger crypto trust companies will charge. So in that space, I think we have a real problem in terms of all those folks who need to protect their investments as part of their estate plan without a lot of good solutions out there. And that's right where Eternal Me sits, is to try to make that happen. So the next biggest challenge we have is beyond crypto, because I think all estate planners know that crypto is a big deal. There could be a lot of money stored there, and it's something to get taken care of. But it's the non-crypto assets that are almost always getting. I have yet to see an estate plan, and that includes anything other than crypto assets, or maybe an email account in there. But what about all these other accounts? Are we just well, who cares? Like, what do we do with all those? And I think right now the current answer is, well, if there isn't $10 million associated with them, then it doesn't matter. But I think maybe it does.
So you had said earlier that Eternal Me has only found, I think, 12 online tools. And I remember when Rufata first came out, I think Ross and Jen, we had a discussion about whether or not online tools were the new thing, if everybody was going to come out with online tools, or if it was just a flash in the pan. And I guess, Richard, you found 12 online tools, but do you think that this is something that over time is going to increase in popularity? Or do you think that providers just aren't thinking about this or don't care and aren't providing the solutions right now because there's maybe not a demand for the solution? Where do you see the future of online tools?
So I think what the situation is that the internet generations are only now really starting their estate planning. And by say the internet generations, I mean maybe starting Gen X, millennials, and younger have really only just started as an age group, have really only just started thinking about this stuff. And so I think what's happening is that the providers are not seeing a lot of demand for it. So it can be very expensive and complicated actually to implement an online tool that is legally binding in all 50 states and 200 countries worldwide. I mean, there are legal questions, there are tangles, there are technological challenges. It is not, you can't just flip a button and make that work. So I think that at this time, the companies who have done something for it are the ones who have been affected the most, right? Google, Facebook, those are used by a lot of the older generations. Almost everybody has a Google or a Facebook account, right? 83% of US adults have a Google or a Facebook account. So I think what's happened is that as they've had to deal with this issue of granting access or getting sued to recover access, they've sort of realized that it's in their best interest to provide a way to do this so that they don't have to worry about it. But I think what's going to happen certainly is that this is going to be, as time progresses, this is going to be a bigger and bigger issue for more and more sites. And I think ultimately, if I had to make a prediction, I would say within 10 years, setting a legacy contract or using an online tool will be a standard part of every account signup. I think online providers will have you do it as part of the signup process because they don't want to deal with getting sued to potentially grant access to somebody's account later down the road because you didn't set up your online tool properly, right? And so they don't want to deal with the liability, nor do they want to deal with the liability of accidentally giving like the wrong person access to your data. So I think we're just at the beginning, and this is just going to be something that is baked into every account sign up in the future. I think it's just going to be part of it. Now, I don't get there. From here to there, I think is maybe a different story. And I think for Eternal Me, our perspective is this doesn't need to be something that all these businesses, all these providers shouldn't have to reinvent the wheel on all this. And they should just be able to have a service provider provide their online tool and manage that process. And I think Eternal Me can play a big role in that in the future.
Thank you. Thank you for that. And I agree, personally that I think this is definitely a trend towards, more service providers implementing on their platforms. And I definitely agree that we haven't seen it take off as quickly because the service providers aren't having that as a pain point as much, but that's going to change. But I do want to point out that, important that even if there's a wider adoption of online tools, when you're thinking about how online tools operate in an estate plan, I really, and I've said this on the podcast before, I really view them as a cousin to a beneficiary designation on a traditional asset. And the issue with online tools that I think we're going to see play out in, on an intellectual level, I'm very curious to see, how certain states or issues will come up, is in the traditional beneficiary designation in a lot of states, that designation will become invalid in certain circumstances. Like if there's a divorce or if somebody had killed their spouse, or killed the person that died that they benefited from. There are, state laws in across the country that would invalidate these types of designations on a traditional asset, but we have absolutely nothing in place under RUFADA as to when they would be invalidated or at a state level. So I think that even if, as we see this mass adoption, I think we are going to see litigation from use of online tools in this other type of area as to when they should be invalid or what happens if they fail, if that the person designated predeceased, and I think you could have a whole bunch of other issues sprout because of that.
That's really interesting. I didn't think of that before, but yeah, I mean, that's a really good point. I wonder when and if that's going to happen, but I'd say it's probably likely, right? I mean, as soon as somebody kills their spouse or there's, one of the, or as soon as one of those issues happens and then, but then all of a sudden they're the quote unquote beneficiary per the online tool, Google or Facebook, they're probably just going to say, well, this was the assigned beneficiary, this was the assigned legacy contact. So they get full access. They're not going to parse it out. They're just going to grant access.
And I think the problem is, depending upon what was stored in the digital platform, possession is 9/10 of the law, right? So once that person, that divorced spouse or the slayer gets access to the digital assets, you may never get it back.
That's a really, really good point. I think that'll be interesting to see how that shakes out. But I think it just goes to say, though, and I'm not being an estate planning attorney, I would say I don't know, but it would just go to say that, the online tools are great, a great place to start, but for certainly things that matter, I think it behooves you to actually include them scheduled out in your actual will or trust. So, you're not relying only on the online tool that the provider, by the way, may also decide to get rid of or change. They may, even all those online tools, it's not like they just give you full access either. A lot of it is limited. So if you actually, I wonder what would happen if you had it all scheduled out, do this with my Facebook account, do this with my Gmail, do this with my Coinbase account, and then there was a divorce. I wonder, would that then fall under the state laws? Because it was actually, these instructions were actually scheduled out in your trust or in your will.
Well, I think you also raised another really interesting point in that the provider can change the terms of the online tool at any time. So you may have gone through and signed up for all your online tools. Whether or not that's a good idea is for another episode. But you may have done it and the custodians may have changed everything and it's in the fine print and you don't necessarily know about it. So your whole plan, if you're relying upon these online tools, could be flipped on its head and you may not even know about it.
Totally. Yeah. I mean, the providers are under no legal obligation to provide the online tool. And when they provide an online tool, they're under no obligation to have it do what you want it to do, nor are they under any obligation to maintain that for any period of time. It's like a courtesy. So, yeah, I mean, that's something. I think it's better than nothing. And I think it's a great place to start, but it is definitely not bulletproof.
So, Richard, how can our listeners find out more about you and Eternal Me?
Yes, thank you. So we do have a product for estate planners and estate administrators called Eternal Pro. And you can learn more about that product at pro.eternal.me. And that will show you all the options for the software, and it makes it really easy to enable your clients to manage their digital assets. We also offer a consumer-facing version for those folks who are DIYers, and you can see that by just visiting eternal.me, where you get a similar experience. Ultimately, the purpose is, and the goal is, to help everyone plan and administer their digital estates.
Well, Richard, thank you very much for your time today. Thanks for joining us. This has been a great discussion. There's obviously an ongoing dilemma to try to solve it, and we applaud just how far you've come in trying to help your clients tackle this important issue. You'll have to come back and give us updates as both the law evolves and how you're able to help planners, their clients, administrators work through this and navigate it.
Thank you. Thank you so much. It was a pleasure to be here and all the great questions. And of course, I'd love to be back.
So thank you to our listeners. Our guest today was Richard Zak, co-founder and CEO of Eternal Me, digital estate legacy management provider. And thank you, Richard. Thank you to the listeners. We'll see you next time.
Thank you for listening to this episode of the Digital Planning Podcast, the podcast designed to educate individuals about all things digital in connection with estate planning, business planning, and estate and trust administration. Please subscribe to this podcast and leave us a rating or review on iTunes, Stitcher, Google Play, Spotify, or wherever you download your podcasts. Thanks for joining us. We'll see you next time.